Right, so in a bearish scenario, obviously price will be forming valid pullbacks to the downside, and we will be looking forward to mark the highs, because when a price forms a valid pullback on a bearish scenario, we only consider the high of that pullback, and we said we don't like consider the number of candles the pullbacks has formed, all of that. We just need to mark the highest point achieved by that pullback, and that's a bearish scenario. And in a bullish scenario, we usually mark the low achieved, or the lowest point of that pullback. Now that's the low of that pullback in a bullish scenario. All right, so in every pullback that price forms in a bearish scenario, there is some liquidity resting above that highest point. So let's say price creates a pullback like in this scenario. I'm actually using a line. So assume this here is a line chart, and you can see the direction. It's actually bearish, and I've literally marked this bearish scenario. So in a bearish scenario, you can clearly see price is forming consecutive valid pullbacks to the downside. So the highs of these pullbacks, like in every pullback that is formed, the high or the highest point of that pullback, there is some liquidity resting above them. And since this is a high, then the liquidity resting above there will be called price. And since these are highs, like in the liquidity resting above these highs is what we call buy side liquidity. And in a bullish scenario, I say like we'll be using the lowest point. The liquidity resting below the lowest point is actually sell side liquidity. So in every high of a valid pullback, there is some liquidity resting above, and then and also on every low there is some liquidity resting below, and that liquidity is called sell side liquidity. So obviously for the lows it will be bullish scenario, and for the highs it will be bearish scenarios. All right, so coming down here into this picture, we can clearly see that I've showcased this. Someone has their mic on. All right, so back here, yeah, price has been forming valid pullbacks like in a row. Right here you can see valid pullbacks, and I've said in every high of a valid pullback there is some liquidity resting above, and that liquidity is what we call buy side liquidity. All right, I have marked this as a DM, and this is literally, let me just stick with the dollar sign showcasing liquidity. We'll be covering IDM on day 3, that is tomorrow. So yeah, let me just stick with the dollar sign for today. All right, so price has been forming the valid pullbacks to the downside, and I've said on the highs of these pullbacks there is some liquidity resting above that, and that liquidity is what we call the buy side liquidity. And also in a bullish scenario, on every pullback that price forms, the liquidity resting below the low is what we call sell side liquidity. All right, so a break of structure, or a bullish break of structure, or a bearish break of structure in any way. All right, in this case, like just I've marked it here, bearish scenario. So in this structure is a bearish scenario, and when you see that price has reversed right here, price has been forming valid pullbacks to the downside, and then price reverses up. All right, let me use this one here so it becomes easier to explain. So you can clearly see price has been forming valid pullbacks to the downside, and then price now reversed up and grabs this liquidity that is resting above this height. We only need a grab past the recent one to confirm this one here to be a swing point. So when you see such a pattern where price has been forming consecutive or has been forming valid pullbacks to the downside in a row, and then price reverses and takes out or reverses, obviously reverses to grab this liquidity. I have said on the high there is some liquidity, and that liquidity is buy side liquidity. So once price reverses and grabs this liquidity, it doesn't matter how many or how much further it goes grabbing the buy side liquidities. maybe there is some kind of another pullback here and price decides also to come and take this buy sell liquidity that is there, it doesn't matter. We only need a takeout or a grab of this initial buy sell liquidity, or the recent one. So the recent high, the buy sell liquidity rest is there. If price reverses and grabs that, and now once price reverses and grabs that, this one here is a confirmed swing point. This means that if now price reverses again, so this one here was a retracement, and now price reverses again after it has taken out at least this recent buy side liquidity. I have said it doesn't matter, it can extend further, taking more buy side liquidity here at the top, or it can just take this one and decide to make that ultimate reversal. So once price has taken out the first buy side liquidity or the recent buy side liquidity, or it has grabbed that, then this one is a confirmed swing point. This means that if price reverses and breaks past this swing point, then that's a confirmed valid break of structure to the downside, because this one here was a bearish scenario. So if this here is a break of structure to the downside, then this means that the highest point achieved by this retracement after it has taken out the whatever number of highs it has taken out, or whatever number of buy sell liquidity or amount of buy sell liquidity it has taken out before reversing, breaking the structure, this highest point is what, like this now will be the high of our trading range, and obviously the low, it will be where price now comes again and repeats the structure. So this one here will be the high of the trading range. This is a break of structure. So that's in a bearish scenario. All right, let's now get into a bullish scenario. So in a bullish scenario, it's literally the opposite of what I've just said in a bearish scenario, because in a bullish scenario, obviously price is forming valid pullbacks to the upside, and I've said on every low of a valid pullback there is some liquidity resting below it, and that liquidity is called sell side liquidity. So once price is creating these consecutive valid pullbacks to the upside and then decides to reverse, so if price now decides to reverse and grab this initial one, or take out, or what will I say, like whatever the one that I say to literally showcase some take out of the liquidity or some grab of this liquidity, and then reverses back. We said after price has take out this one, it has break past that, it has swept that, like whatever, as long as price has made it out past this and grab that and then reverses back before it, like literally after it has grabbed this one here is already a swing point. So this means that if price now reverses and breaks past this one here, then this one here is a bullish break of structure, and the lowest point achieved by that retracement will now be the high of the current trading range. So yeah, we only need, you can see right here it was two buy side liquidity that we are taking here, like two highs, but right here it's only one. So price here grabbed only the first sell side liquidity and then made that ultimate reversal to the upside. So this already confirms this one here is a valid break of structure. We said we only need at least the first one. So once the recent one, it has, like price has taken that and reverses and breaks past that, then that's a valid pullback. The reason as to why like only one can confirm this one here as a valid break of structure is because once price retraces and takes out this recent sell side liquidity, this one here is already a confirmed swing point. This means now no matter how many pullbacks or no matter how many lows price takes out, or no matter how much amount of sell side liquidity price goes further grabbing, this here does not change the fact that this one here will remain to be a swing point. So this means if after all that and reverses and breaks past that, then that's a valid break of structure. All right, so this was actually a simple diagrammatic representation so that it can reinforce what I will be showcasing on a real chart. All right, so right now I'll be diving into the real chart to to solidify everything that I've literally showcased. And yeah, I believe by now you have gotten something. And yeah, I usually like starting with this kind of representation using simple diagrams, because it makes the work easier when you get into the real chart. Yeah, you will get like the kind of foundation. Or I was looking for the eraser. I want to erase all this. Does anyone know how to erase all this at once without erasing the ones on the charts? Like just choosing the one that you want and delete it like at once, all of them.
Yes,
If
I know how to.
how do you achieve that?
You press Control, you long click Control,
Yes.
and then you highlight without using the rubber, just
Or
using your
without using the eraser.
yeah
So control, then highlight all
yeah
this,
yes
then delete.
yes
Oh, that's good.
perfect.
Thank you. All right, so right here, you can clearly see I already marked the pullbacks. You can see right here, price has been forming a valid pullback. So this one is a valid pullback high. This one here, another one, a valid pullback high. Again, another valid pullback high. Yeah, you can literally see if you was in the previous session identification of pullbacks, you can clearly see that all of these pullbacks meet the criteria to be called valid pullbacks. And since this is a downward uh, candlestick based, like downtrend, or let me just use a bearish scenario, we are anticipating like we'll only be marking the highs of the highest point achieved by that valid pullback. And I have said like the highs of these valid pullbacks, there is some liquidity resting above there, and that liquidity is what we call buy side liquidity. So right here, I will not confirm this low to be a swing point, or I will not confirm a break of structure if at least one buy side liquidity price retraces and grabs that. So not until price retraces and grabs at least one buy side liquidity, I will not confirm a swing point and also a break of structure at the same time. So right now, let me run price and see like what price does. You can see price is actually retracing, and I only need a takeout of the initial one. Exactly right here, you can see price has grabbed the recent buy side liquidity. So exactly right here, price has grabbed that. It doesn't matter if price breaks past that or just sweeps this initial one. By the way, I've said price can literally go up, taking additional ones like additional buy side liquidity before it actually reverses. But I said that doesn't change the fact that this low is already a swing point. So this means right where price is, if price now decides to reverse without going further, taking this additional buy side liquidity, this here will already be confirmed as a valid break of structure as long as price breaks past that. So now let me continue running price and see what price does. Right, you can see price is actually reversing without even taking additional buy side liquidity. And exactly right here, you can clearly see the break was achieved and this buy side liquidity was not yet taken. I said we only need the initial one, or the recent the recent buy side liquidity to be taken out. And then after that, obviously, once that's taken out, this one is a confirmed swing point, and now I will need a reversal to break past this confirmed swing point to confirm a valid break of structure to the downside. Right, so that means it's a bearish break of structure. Alright, so let me just place it at the bottom, exactly like that. So you can clearly see, and I said like the high achieved by this retracement is what now we'll be calling the next, like the current like the current trading range high. Because after price has created a value break of structure, this means we are in a new trading range. Yeah, we're in a new trading range, and this one here will now be the high of the trading range. All right, so right now, yeah, price has made that break of structure, so the process now comes again. We are not marking anything here, it's just the valid pullbacks, the break of structure, and market structure. I usually like placing a highlighter somewhere there. So exactly right here, we can clearly see valid pullbacks to the downside. Like there's no need to tie yourself like marking all the valid pullbacks in the trading range. Just find the initial one, because we said after the initial one is taken out, this one here is already a confirmed swing point, and no matter how many price checks, as long as this high is protected, I mean as long as price does not break past the trading range high, then like there is still a like the break of structure will still be valid. So let me just, you can clearly see here this is a valid pullback, and this is, since this is a bearish scenario, then this one is a valid pullback, I mean a bearish valid pullback, and we literally mark the high of that pullback. And at the high of this pullback is what I said, there is some buy side liquidity resting above here. And this buy side liquidity is the one that I need price to retrace, grab it, and then confirm the same point, and then later maybe price will continue all the way up here to check further buy side liquidity, and at the same time to fill fair value gaps or imbalances, and also to mitigate some kind of order flow or order block, and then reverse, breaking past the confirmed swing point. Right, so let me continue running price so that you can get it here. All right, so exactly right here, we can clearly see that price has grabbed this initial buy side liquidity. You can clearly see this long wick came all the way and grabbed that liquidity. And I said it doesn't matter how, like, I said it doesn't matter if it's a break or a wick, as long as the buy side liquidity is taken. I mean, the recent buy side liquidity is taken, we can confirm the swing point, as well as price reversing and breaking past the swing point, we can confirm the break of structure. But this scenario is different. You can clearly see that price here retraced using two candles. You can see two bearish candles. We need at least three retracing bearish candles. I mean bullish candles, because they are actually bearish. Or I can just say three retracing candles. You can just see the structure and whatever to get to know like where are we heading, and the retracing is heading at what direction and all of that. So right here we can clearly see price has done that, but the retracing candles, there are how many? 1, 2. So in this case I will not confirm this one, because we need at least 3 retracing candles. All right, so in this scenario in this scenario, when the retracing candles are less than 3, you take this to the next one. So right here, exactly right there. So this one here becomes the now becomes the recent, the recent valid pullback, and the recent valid pullback, and we will need a break past it to confirm a swing point. All right, so continuing to mark price, this one here is not a valid pullback. So price here created a valid pullback, and we said I need the recent one. I can just leave there and mark again this, but there is no need, because I said we only need a takeout of the recent one. So right here I'll be getting, exactly right there. So that's the recent one. So if price creates another valid pullback, I will be shifting to the next one. Yeah, exactly here. We can clearly see if I rewind, right, I think, all right, exactly right here. You can clearly see that this one here is a valid pullback. Exactly right here. So that's a valid pullback. And so if price now breaks past this valid pullback, then I'll be confirming the swing point. And exactly right here, you can see price took out that exactly right there. So this means that our recent buy side liquidity is grabbed. So that's a confirmed swing point. And right now, it doesn't matter how many or how much more of buy side liquidity price comes along to take and mitigate or fill fair value gaps on the imbalances before reversing, breaking past this swing point. This one here is a swing point and it cannot change to be something else. It's already a swing point after price has taken out the recent buy side liquidity. Right, so right now you can clearly see price is now retracing. Let me increase the speed of these candles. All right, price took out the second buy side liquidity exactly right there. You can clearly see that. And so let's see what price does. All right, price is even going further, maybe for additional buy side liquidity. Yeah, exactly right here. Did it make it out to the third one? Yeah, it swept the third one and it's literally now reversing. So let's see. Right, the third is taken out and right, so price is now reversing. As you can see, price is now reversing. All of this is of insignificance because you are marking the structure. But if let's say we were trading, that's when now we will be marking the POIs so that we can get to know like why price is reversing from this area, and that's when now trading starts. So, but right now we are just marking the structure. And I have said, by the way, while I said that the buy side liquidity, it doesn't matter how much more buy side liquidity price comes taking, but this needs to be very crucial. This high needs to be maintained. If price breaks past our trading range high, this means we will be like price will have made a change of character. That means it will have changed bias from being bearish to bullish. So this high needs to be maintained. All right, so right now this one here is a bearish break of structure, and like I said, the high achieved here is what we call the, the trading range high, like the new trading range high. So I can just yeah, do that, and currently we are in a new trading range and the process continues. What's the process? Marking the recent valid pullback, and I can clearly see the recent valid pullback is right here. I believe you can now spot them by just using the eyes without like marking the highest point at the lowest point of the pull, like each candle, so that you can identify a valid pullback. Yeah, you need to practice in such a way that you can just spot them with the eyes, yeah, and all of that. So right now this here is the recent one, and if price decides to, and by the way, you have noticed that the marking, like the identification of this recent valid pullback, I'm actually doing it it doesn't matter where I'm actually marking it. It can be before the break of structure or after the break of structure, as long as price has broke past the swing point confirming a break of structure. And this one here is the recent valid pullback high on that trading range. So right now, if price reverses and takes out this recent valid pullback high, this one here is a confirmed swing point. And if price now does this, I mean, if price reverses now and creates a valid pullback, then I will need to shift to the recent valid pullback that price has created. Right, so I hope
Okay, sir. Sir, if the market take this IDM with only two bullish candles, then we can consider it is as valid IDM. What do you think?
now in that case, it depends literally with the sizes of the candles. In this scenario, you can clearly see the sizes of the candles are very, very minimal, like very, very small, and also the body size like very, very small. But let's say now it's like sometimes the retracement, it can be less the three retracing candles, but in that case the candles are very big in such a way that it have literally taken like more than five previous candle highs. So in that case now that's reasonable because you can even mark the retracement of that pullback of that retracement, and you'll find that using the Fibonacci it has maybe achieved to the 50% of the trading range, or even sometimes 38%. Even if it's actually two candles, yeah, sometimes it can mark to be that, but it's very, very rare for price to do things like that. And Yeah, but it's very, very important to also know that, because it's not always that price retracing with less than two candles is not a valid retracement. All right.
Because in today's in euro USD market take the IDM with only two candles because of news.
Yeah. So in that scenario, you check the length of those candles. Sometimes if the candles length, oh, yeah, the height, I guess, yeah, the height, I think that will be good. The height, or even the length is good. So the length, and if it has taken like more than five, or at least five previous candles lows, if it's in a bearish scenario, in that case now that's reasonable, because of some unpredictable, because let's say something like this happened, like this big candle it's created, and then price creates another big candle. So you can see like this is reasonable, because price has retraced, like you'll find that price has retraced a significant, it has given like a deep retracement, even if, yeah, you can confirm that even by use of a value like a Fibonacci. You will see that the retracement is of some x, like let's say 38.2 or 50 or something like that. Like the it just happens sometimes, sometimes it doesn't. So like it's very, very like it's critical. I will explain further on that. Maybe I will find a video to explain more about it. But yeah, sometimes it happens, sometimes it does. But it's not always that it is confirmed to be a valid retracement. All right, so right here, this here is the valid pullback, the recent valid pullback, and the high, the buy side liquidity. That's what I'm interested in. And right now, if price reverses and takes that, so right here, you can clearly see price is all right. Price has taken that out. So this one here is already a confirmed swing point. So right now, it doesn't matter how far the price retraces, as long as it does not cross, or it does not break past our trading range high, then reverses and breaks past this swing point low, then I am confirming the bearish break of structure. So let me continue running price. All right, so price is literally reversing.
I'm not seeing the screen.
All right, who else is not seeing the screen?
I think
I
we
think
can
we can
see it.
see it.
All right, you can
I can see that screen.
yeah, so you can exit and then get back. It can be a network problem on your side. All right, so right here you can clearly see price has grabbed that and made. So once price has grabbed that, we say that we confirm this one here to be a swing point. So this one here is now our trading range high of the current trading range. So this means that I can confirm this one here as a swing point by using this highlighter. I usually like using the highlighter to mark the, yeah, exactly like there. So this one here is now a confirmed valid break of structure to the downside. I mean this one here. So that's a BOS. Yeah. Right. So now after that, then another. Yeah, you can see like the process happens. And by the way, this also repeats on the bearish scenario. The same. It's just that now on the bearish scenario, it won't be the high. It will now be the low. So exactly right here, I can clearly see this pullback here. All right. Before that, after price has made that break of structure to the downside, the previous pullback was this one here. So this one here was the pullback that I was actually looking for price to grab the liquidity resting above it. So right now, let's see what price does. If I run price, let me reduce the speed of these candles. You can clearly see price is retracing, and I wanted a retracement all the way towards past this one, but price ended up creating another valid pullback down below. Yeah, exactly right here. You can see price created another pullback. So in this case, I will be getting into the high of this pullback. I said it doesn't matter the length. All right, so I think can be some. Is this here like as price? Are these equal? If they are equal, then I will need to take the other. All right, they are not equal. You can clearly see that this high is yet is not equal, and also it has not like broke past this here. So this means our trading range high is correct. I mean our pullback high is correct. All right, so right now let me run price, and yeah, I'll be waiting for price to take out this before I confirm a valid retracement, a valid swing point. All right, price is literally retracing right now, and exactly right here price has grabbed that. So this means that this one here is a valid swing point. And right now, if price comes all the way breaking past this while protecting our trading range high, then that will be a valid break of structure. All right, so price is now doing its thing. That's when now people or traders mark their POIs so that they can know where price will be reversing from. All right, so yeah, price is now doing its thing inside the trading range, and then after that we'll be expecting for price to break below our swing point and confirm the bearish break of structure. So exactly right there, price has broke past the swing point, so this one here is now a confirmed break of structure to the downside.